Hi, it's David here with Futures Trader. I want to give you some information on this NQ because they had the contract rollover, and sometimes the pricing definitely changes and it affects how the chart is positioned as far as the levels. But I want to thank you guys for the 4 people that had liked this video. Thank you so much for sharing the information because that's what the algorithm would do is suggest it to others. And that's what we want to do. We want to help somebody else become profitable. And again, it's taking me time to draw these charts up. So it's good that you take the time to like the information. Want to make sure that we're able to share condensed, digestible information, all right, and so they can become profitable. All right. So anyone that you know, you can tell them come look at the video, and hopefully I can explain price in a way that's very simple and have them look at the chart in a very simple way. All right. Now, thank you for the likes over here on TikTok as well. And you know, I like to read the encyclopedia and the dictionary, and I presented this word to you some time ago, and I just want to reiterate it one more time, and then we're going to dive right into the 1 minute and that daily. All right. So procedural knowledge. This is something that's important, also known as knowing how and sometimes referred to as practical knowledge, imperative knowledge, or performative knowledge. Now, this is the key, is the knowledge exercised in the performance of some task. Now, the word procedural relating to an established or an official way of doing something. All right. Related to an established or an official way of doing something. So having a variety of approaches, different approaches to the market is not how you would trade professionally. When you go see the doctor, he has a procedure that he would do on you, the same procedure that he would do on anyone. So it's an official way of doing something. It's even in law. You go to court, they have procedures that they go through as well. So we want to make sure that this language here in this field is indicative of what's universal. All right. So if you want to do this professionally, I suggest that you take on the responsibility of adhering to some simple language, nothing that's convoluted with a lot of rhetoric that you can't understand. Plain language is important. Now, if you're new to the channel, clearly this is timeless content here. I try to gather just a few videos that's mostly watched and present that information to you. I try to cover the information for you here, the different approaches to how I go about trading markets. This is the universal trend and the price action. This is in real time. You're more than welcome to take a look at that information. This is the primary focus of the channel. So no indicators here. There's the price action method, no indicators. There's the trend. And then of course that universal chart scale is something that you can utilize on any market, any time frame. And I also gave you 2 other turning points in the market in 18 minutes. So I try to give you enough information, roughly in about 40 minutes, to try to tell you how to trade in a very simple way. Now, there's far more knowledge that is needed to really do this, but this should be a great foundation for you. Now, if you want to see me trade any of these accounts, you're more than welcome to take a look. I traded them all, even got 1,000 ticks in one trade. You can blow out a live account, and I will explain to you with simplicity and logic while the live account is necessary to blow out, and you can do it several times, and it makes sense. Stay in your trade. We're going to look at some of that information on the chart so you'll know why it's important to be there. And then, of course, there's other aspects to being a professional trader, and I try to introduce you to some of that. And this is what I do off screen here. Is knowing days or hours in advance where price should close would change how you trade. And that's just a succession of videos, kind of giving you a before and after effect. All right, now let's go ahead and take a look at this chart really quickly here. We have the trend, we have the trend distance, we have the trend, then we had a fail trend. All right, so we failed because we did knock this one out. And I want you to kind of keep this in mind, all right, because we're going to look at that daily right after this. We gave the distance back down, gave it again. Every time they stopped, they gave you the distance. All right. Now, as I scroll forward, here's the center of the chart, the upper half of the chart, and then the lower half of the chart. Now, I am the pioneer professional of this method of support and resistance. It's very universal, and you don't need any tools to do it. It's an official way of doing something. All right. So just want to make you aware of it. And you'll notice wherever the trend distance kind of kicked in, and I'll scroll the chart slowly so you can see we're still beneath of course, the center of the chart, as well as the lower half of the chart. All right, so it kind of kicks right back in. You can just watch the chart as I scroll forward. And then, of course, they gave you the volatility with the trend distance. All right, so here's the 930. 930 is right about here, right about there. Okay, so you get that lift, and then there's the volatility push with the trend distance. All right, so now you're going to be measuring that distance moving forward. And again, pay attention to the lower half of the scale As I scroll forward, you'll see you don't need any kind of Fibonacci tools or anything like that, and you can pretty much catch all of those moves there. Now, let's just take a brief look here. Just try to draw a little bit of information here, given that you may want to interact with this when it comes time. Now, when they pushed up off the low here, you will go 385 up to 395, 395 up to 405. And there's the turnaround. Came back down to this bottom. Now we have this static level down here, which is at 355, and I believe wholeheartedly this is where they're going to go when they come up. They should be there. If they decide to go up, they may come up as high as here. All right, and that's just a little bit over the center of the chart. Coming down here, they kind of overshot your 385 to your 375 coming down, and then they went back up, and then you run that same static levels right here. You run that back to the upside, but coming back down, you want to see them begin to hold it. All right, so when they come back down, you want to see them hold it, see if they can get that done. All right, so now let's take a look at that daily, and then I will let you go. All right, so if you're new and you don't know what the price action pattern is, it's this. All right, so all you get is the bars mid. Excuse me, real quick. Let me get this arrow. You get the bars mid here above the high, okay, or the high below the mid. If you get that happening, and this bar can be going up and down, it do not have to close. If it's going up and down, you get that scenario, just go up. And no close back beneath here is ideal. Hard stop there. Now, if they do close beneath there, it can still work just as optimal should they not do that. Now, over here to the downside, it would be mid below the low or the low above the mid, whichever way you understand it. You go ahead and get in that trade, and the hard stop right there, and the no close level should be right above that bar. Now, we had the trend. This will look familiar to you, but again, the price levels shift. So I had to kind of just redraw this chart and kind of go ahead and give you these static levels and all this information all over again. We had the trend down clearly, had 4 wicks up here testing that second bar lower, that open of that bar. And of course, there's your trend down. Here's the center of that trend. And then, of course, they got down here and they turned it around. Here's the second bars moving up. You know, of course, the open of this bar is important. They went down into the open of that bar and then they turned around. Here's a pivot. There's 1, 2. They did 1, 2 fairly immediate. So hopefully they're still down here to hold this up. Here's the center of the uptrend. We haven't had a failed trend distance yet. All right. Now, I hope that that is not the key. I mean, the case. If they do that, that will lead to what we just saw on the 1 minute chart. That would be a problem. So, but hopefully they'll be down here to kind of pick it back up. Now you had, of course, several wicks up here again. All right, and then they, of course, they stopped, they lifted up, made a pivot, and then they broke that pivot 1, 2. They can move down from this area here, and then they kind of gave you that effect because they made a pivot here, and they're not giving you too close. It's right back into this location here, and there's the no close bars over here, and there's the hard stops. All right, now they're falling out of this. Now, could this be one below this pivot and then another? And then we'll have that pressure coming back down into this area here and possibly for a trend failure. I hope that's not the case, but it could end up being that. Now, here's the other side of the coin. This thrust down, and then of course they push through it. This could be the same thing where you'll get the thrust and then they'll climb again. All right, so we're going to have to see if that's going to be the case. But I wish you all the best with your trading. Take care.